reported its numbers yesterday. Today we are joined by Mohit Malhotra, who is the CEO at Dabur India, to give us his insights and more understanding about what the earnings were in Q4 and what can we expect going forward. Thank you so much, Mr. Malhotra, for joining in with us. And, I'm going to just jump right in and talk about the demand trends. What are the demand trends that you're seeing in this current quarter? Any sort of down trading that we've seen coming in from the company, given that, the inflation pressures have coming in? So what is the outlook there?
So I think we are facing an operating environment which is extremely challenging, and because of the inflation pressures, the entire industry has taken up prices to an extent of around 10% odd, and despite that, that's because of the 10% pricing coming on top of a minus 4% volume. We are seeing a top line of around 6% in the last quarter of previous fiscal year. Now, we see this volume decline coming from a 20% high volume. So if you look at the first quarter of last year, volumes were up 20%. Gradually, slowly, quarter after quarter, last quarter was minus 2 volume, and now it's around minus 4 volume in the fourth quarter of previous fiscal. So we are not seeing any abatement in terms of volume or volume recovery going forward. I think as the inflation is only increasing and not abating, and it's coming on a high base, I think there will be a volume pressure for at least a couple of quarters in the industry, and it's industry-wide. It is not a particular market, but it's industry-wide, but more gets exaggerated in discretionary and less in staples. So we are more of a necessity, so it's not going to impact us as much. And this is both in urban as also rural. So I feel there will be pressure for next 2 quarters.
Okay. Mohit, I just want to try and understand the impact on margins. You've taken price increases, but margins have declined on a year-on-year basis by nearly a percentage point. Do we see continued pressure then? And what is the range that you're looking at as far as margins are concerned?
See, you should look at full year. We should not look at quarter on quarter. If you look at full year basis, last year, Dabur has been able to hedge the inflation and maintain the margins. If you look at full year basis, our operating margins have only gone down by around 20 basis points. So we've been able to maintain our margins in the level of around 20% operating margin, which has been last year, and so is the case in the current year. Now, last year, our healthcare fired and healthcare margins were very high. So if you actually look at margins from a year before last, we've actually increased 10 basis points in operating margin. So that way, we are on an even keel on margins. Going forward on operating margins, we have targeted to keep the operating margin same. So to keep the operating margin same, we'll have to hedge the inflation through price increases, rhythm of cost control through our Samriddhi program, which is well set in the company. I think we'll have to really push our pedal on the Samriddhi program, which is cost-saving program, and also rationalizing or cutting back a little bit on media as well. So I should not rule out that media should be little calibrated when the demand is low and when the categories are shrinking. So our execution in last mile at the trade level, at the consumer level will be more aggressive as compared to too much of demand building for the category on television.
Mr. Malhotra, my next question is about the healthcare segment. You did touch upon it. Now that accounts for around 34% of the sales. And like you mentioned, obviously that is higher margin also coming in from this business. Last time the margins were much higher because of the COVID-19 situation. Now, obviously the tailwinds have tapered off. So what is the outlook on this segment? And, could we see a bit of an impact coming in on the margins then because of the lower margins now?
So you're absolutely right. So there was healthcare always contributed around 30% of our total business, and 30% business went up to an extent of around 35%. Because of euphoria of COVID and healthcare taking real prominence because of COVID, people started using a lot of healthcare. The penetrations of healthcare went up by almost like 500 basis points. So that 500 basis points healthcare penetration has got moderated to around 200 basis points increase from prior COVID levels. So therefore, penetrations of healthcare in the country, which are relatively lower as compared to other countries, so that has gone up from pre-COVID levels, but that euphoria has kind of now diluted as we go on. And we are navigating very high bases of healthcare for COVID. So a couple of quarters we have an issue in terms of navigating that high basis. There will be moderation in healthcare, and the percentages from 30% contribution of healthcare in our overall scheme of things will settle at around, I think, 32, 33 because the penetrations are moving higher, and we are consistently gaining market shares in all our lead brands. For example, Chyawanprash, you see, we sit at around 64, 65% market share. On that market share base, we've gained around 200 basis points, 250 basis points actually in last quarter. In honey, we've gained around 300 basis points. In ethical business, we've registered a growth non-contextual of roughly around 17% for the full year. Our OTC business has also gone up by around 15, 16%. So all the verticals of healthcare are doing well, significantly better than pre-COVID. So it's a 2-year CAGR that you measure. But a little bump in next 2 quarters is a high base quarter for us. That we will see. But I think we are looking at an overall picture for the whole year. And that, I think, should augur well for us.
All right. Mohit, also talk to us about the food and beverage segment. I guess this is a time of the year when this comes into the fore, given the harshness of the summer. Could you give us an outlook there as well?
Yeah, see, if you look at, analyze all the FMCG categories, we've seen a compression in FMCG categories everywhere, but the exception has been beverages. The beverages market is actually growing by 9%, whereas all other categories are going down. This is also on account of severe summers that we people are facing. And also it comes off a lower base of when the out-of-home consumption during COVID was down, so people are coming back. So there's almost like a revenge buying happening and people are actually going out. So there's a tailwind towards the beverage and out-of-home consumption. And we as a real brand have introduced PET bottles. So PET is a new story for us, and PET in last 1.5 years, we've seen almost now breaching a 100 crore mark for us, which is a great milestone that we've achieved. So we've grown by around 35% in our beverage business, and we are trending well, and we've actually got shortage of installed capacity for which we are actually approaching third parties, and we are paying high processing charges for getting the product manufactured. So our overall food and beverage business is actually trending very well, and that is the one which will hedge a little bit bump that we will see on our healthcare business. So I expect a very high double-digit growth in our food and beverage business going forward also.
Okay, and on that positive note, Mr. Malhotra, thank you so much for joining with us on ET Now. It's always a pleasure having you on the show.